Good morning. It is Monday, August the 24th, 2026. We hope everyone had a nice weekend. I played in this hockey alumni game over the weekend. For those of you that are local, up at the Ice Palace. Pretty funny. It was a sold out event, all 600 tickets, I think. Nonetheless, it created a pretty fun environment for us older guys that have been out of the game for a while. Most importantly, the feedback I received after the game, my wife says I still got it. All right, I still got it apparently. 42 years old, I can still play hockey at a reasonably okay level, I guess. A bit sore yesterday and today though. A little sore, just like my knees, my hips, just hockey's hard. But all right, so reviews, fall reviews kick off this morning, about a half hour from now, 8 a.m. Eastern. So we are really, really excited. So I'm going to keep this relatively short. So I really just wanted to discuss the headline I saw circulating a good bit throughout last week. And this was the news that the U.S. Treasury announced it will be doubling its buybacks of longer-term debt. All right, so a couple things. One, like, what does this mean? And then two, why, just personally, I don't think it means much at all. I don't think what they're doing matters a great deal. All right, so to begin, like, well, what does this mean? Well, we all know the government, the U.S. has debt, right? That's I don't think that's a surprise to anyone. This announcement certainly isn't changing that. All right, so the U.S., what's going on here is, let me back up. So when you buy or sell a stock, right, so let's call it a stock of Apple or NVIDIA, SpaceX now, right, like the stock market, particularly in the U.S., is very, very liquid, right? There are millions of participants. It is really, really easy to match a buyer and a seller of a share of stock pretty much at any time while the market's trading. All right, the fixed income market, so the bond market, doesn't exactly work like that. So like bonds that are maturing in like the very short term, so like very short term bonds are quite liquid. You know, it's fairly easy to match buyers and sellers. But you can imagine, given the size of the bond market, so the bond market is much bigger than the stock market. So some people don't know that. But given the size of the bond market, you can imagine, so say you bought a bond 10 years ago. So 10 years ago, you bought a 30-year bond. All right, so you're 10 years in, it's gonna mature 20 years from now. So maybe your maturity date is, let's call it, your bond is gonna mature August 24th of 2046. Okay, and you can imagine like that there's a number of these bonds that are maturing, different days, weeks, years. Now you can imagine if you own that bond and you go to the market, you say, hey, I have a bond 20 years to maturity. It matures August 24th of 2046. Like, you're probably not gonna find a buyer of that bond instantaneously. It's not like you're selling a stock, you're going to the market. It's not the way it works. So what this announcement's saying, and they've already been doing this, so what the Treasury is announcing is, hey, like, we are going to increase our purchasing program of these longer maturity bonds to provide, and what they're doing, they're providing more liquidity, right? They're providing a buyer of kind of these old bonds, right? So what they're doing more specifically, the Treasury announced, so they're going to double their purchases from roughly $2 billion in operation. I'll get to what an operation means in a minute. They're increasing it from $2 billion to $4 billion each operation. All right, now these operations, they've been doing them for a long time. It's about every other week, so once every 1.5 weeks. To state it a better way, it's 8 times a quarter is the way this works. All right, and so, but again, so they're buying this debt, but you have to remember, the U.S. is always also issuing new bonds, right? They're selling, they're issuing new bonds in the marketplace. So like by no means is this reducing the debt, that they are more just providing liquidity to people that want to sell their old bonds, right? And in my eyes, they're probably looking at China is what this really comes down to. Like, you want to sell your treasuries, like we'll buy them. You know, like I think a lot of it comes down to that. So lastly, just wanted to provide some context with these longer duration purchases, like going from 2 billion in operation to 4 billion in operation. Again, so eight times a quarter, and they're starting this in September, early September through like early November. So it's not even a full quarter. From what I've read, these moves are going to be adding about 14 billion of long-term purchases. All right, so between September and November, it's adding about 14 billion of liquidity on the long end of the curve. So to put that in perspective, like the Treasury market is tens of trillions of dollars. All right, so is 14 billion over a couple months going to have much of an impact on a $10 trillion bond market? Just in my eyes, no. It just, which is why I think it makes for nice headlines. Like maybe it helps a little bit, and really the way the market reacted kind of shows it's, in my eyes, kind of a non-event. Yields didn't really move. They moved down for a second, then I think people read kind of what I just put together. Yeah, it's probably not going to make a huge impact on the bond market. So nonetheless, that was a little bit nerdy, but just a topic that I'm sure you're going to just want to be a bunch of misinformation, and just thought I'd throw some facts at you this Monday morning. So hopefully that wasn't too much. But questions, comments, concerns, please don't hesitate to reach out to our team. And we are looking forward to seeing many of you here in the days and weeks ahead. So we hope you have a great week. Thanks.